Hello everyone and welcome to this exclusive Middle East customer seminar. In the past we have done these customer seminars face to face of course, but whilst we feel our way back to more routine working and travel, we want to take the opportunity of using this hybrid way of working to present this short regional and industry overview. I'm very happy to have with us today our external guest speaker, Zeynep Kısaveysöğlü from FrontierView. Zeynep is the Director of Turkey, Middle East and Africa Research at FrontierView. I'm Rob Watson, I'm the Global Marketing Director for the Powders Business Unit in Allnex, and together we will go through the content of today's webinar. The overview for today's session looks like this. We have three sections. Zeynep will give a higher level overview of macro trends in the region. Then I will talk about what we see happening in the coatings market before focusing specifically on powder coatings. So let's start with the regional macro trends, and Zeynep, I'll hand it over to you.
Hi everyone, I'm Zeynep Kısaveysöğlü, Director of Middle East Africa Research at FrontierView. I will be giving you a 15-minute presentation on the macroeconomic outlook for the Middle East region. This will be intended to align you on the external environment, on the factors outside of your control for 2022, so that you can adapt your strategy accordingly. To do this, I will be sharing with you key takeaways of the outlook for the region, our economic forecasts, as well as the sentiment of senior executives and major multinational companies across technology, consumer healthcare, and industrial sectors. The key messages we would like to leave you with from this presentation are, firstly, that construction activity will increase strongly in commodity exporting countries. Second, managing supply chain pressures and high inflation will remain a challenge into Q1 2023. Third, customers' need for cost efficiency providing solutions is increasing. Fourth, price sensitivity and competition is going to further intensify in the region, and basically what we see is multinational companies looking to support price increases with value-added services and higher value products. And last, effective talent management, product portfolio updates, reevaluation of route to market are key focus areas for the multinational companies that we're working with across the region. The outlook for the world economy has been dampened since Russia's invasion of Ukraine. We have revised down growth expectations for Western Europe, mainly due to higher inflation, lower consumer spending, slower industrial production, and a potential hit to investments eventually. We have revised down major markets like US, Japan, Brazil, and Mexico for a combination of reasons. And we have revised down China's growth outlook mainly due to its ongoing zero-COVID policy, and we expect this policy to remain for the rest of the year. And in this context, the Middle East Africa region has actually emerged as a strongly growing region due to the many energy exporting countries here. Higher oil prices will cause higher exports, investments, and thus GDP growth in the MENA's major countries. But firstly, capturing opportunities in those countries will not be easy, and we will talk about some of those challenges. And secondly, there are key countries like Egypt that are not net energy exporters, and we will see their vulnerabilities intensify. Within the MENA region, our expectations for the countries have shifted, mainly across the energy importers and exporters. We've made strong upward revisions to the GCC. There, we expect higher oil and gas export volumes as well as revenues. We expect these revenues will not go into mass cash stimulus to the population or general operating expenditures, but actually into investments. So a rise in construction and overall investment activity could create opportunities. But we have revised down our Egypt and Lebanon expectations as their currencies, inflation outlook, and high debt levels come under more intense pressure. The downward revisions here to Egypt are largely from consumer spending, however. And actually, you can see here that we still expect relatively good growth in investments in Egypt. This growth is but lower than last year and lower than our original expectations for the year. We expect slower investments in Jordan and a negative investment environment in Lebanon this year. The GCC is where you see strong growth in capital expenditures, mainly driven by the public sector. In Kuwait, delayed projects are starting to resume with a higher oil revenue outlook. Transportation and logistics, healthcare, and utilities projects could see some slightly higher spending. In Qatar, infrastructure investments ahead of the World Cup support demand. The blockade removal also improved the outlook for private investment, especially in the retail, ICT, and real estate sectors. Let's look a bit closer to the UAE. there are question marks around the post-Expo construction pipeline and around the rising costs. But improving private sector confidence and public sector revenues should drive strong investment spending. Government's goal of expanding transportation infrastructure, both for rail and road, industrial investments, and logistics will drive construction activity. The new Dubai Master Plan and Abu Dhabi's infrastructure expansion plans, District 2020 for post-Expo, are key opportunities to monitor. And petrochemical, renewable energy, and water management projects will also drive growth. But wage pressures and material cost increases are key challenges in the UAE. Moving on to Saudi Arabia, we will see double-digit investment growth this year. Significant portion of it is driven by public sector entities such as the PIF and Aramco. Accelerating Vision 2030 mega projects, investing in domestic tourism, expanding key areas of manufacturing, logistics, and warehousing infrastructure, and petrochemicals industry are key priorities. New areas such as renewables, military equipment manufacturing should also be monitored. Construction sector surveys show expectations for both contract awards and headcounts to increase this year in Saudi at one of the highest levels globally. But manpower and product shortages and significant material cost increases are again the key challenges here. But also managing rising competition in Saudi Arabia will be the main focus area for executives. Moving on to Egypt, we see a country with strong opportunities, but with numerous operational challenges firms need to manage. The country's external vulnerabilities are surfacing to threaten the economic outlook. While the public investment pipeline is strong, the government's revenue outlook is under risk, and some funds this year are likely to be diverted to managing inflationary pressures and securing food supplies rather than accelerating investments. Plus, rising input costs, import restrictions, delayed payments, and decreasing private investment are pressuring firms. In terms of priority areas, the new capital and medical city have been important for the government, but transportation, both again for metro and rail and hospitality, are also seeing higher investments. And we, of course, also have challenges around cost increases. Wage pressures are slightly less acute of a challenge here than in the GCC, but of course, rising inflation is actually really pressuring companies. And Egypt's industrial activity is also easing due to high costs, as I've just mentioned, but also slowing demand from Europe. Non-oil activity is picking up in the GCC in the meantime, and this is supported by improving confidence and trickle-through of those public sector oil revenues. As you can see from the Purchasing Managers Index, a survey of private sector non-oil companies' performance is really diverging between the oil exporters and the oil importers. Opportunities are definitely expanding across the region, mainly as we've just mentioned, the GCC, but still in Egypt. But capturing these opportunities is still very challenging for businesses this year. Companies are facing rising import restrictions, intense competition, and, as we frequently repeat, rising costs. And let's take a look at these costs in a bit more detail. This chart here shows our expectations for when the cost pressures on some of these factors should ease. Unfortunately, these timelines have been extended from end of 2022 as our previous expectations now towards kind of Q1, at least into Q2 of 2023. High costs and extended delivery timelines should last well into 2023 from a shipping perspective, with industry sector stakeholders expecting normalization in those shipping dynamics more in 2024. Natural gas prices will remain high within the EMEA region as well, as you can see from here. Construction materials have a mixed outlook. Slowing Chinese activity is definitely providing some relief to those prices. But when you look at agriculture commodities, food prices definitely remain high into 2023. And lastly, on the oil front, we expect Brent crude oil to average $111 per barrel for, again, Brent crude oil in 2022. Prices can fluctuate toward 140, 150, but any figure around that or above is unlikely to last. We think that demand will slow down significantly in this scenario, and we would expect OPEC would further raise supply to really stabilize the markets at that point. This means very high and higher than expected oil revenues for the GCC, but also high transportation inflation and just overall high operating costs for firms for the remainder of this year. Plus, the Russia-Ukraine conflict is raising the price of key commodities outside of energy. You can see here their common share of world supply of key commodities, a lot of which go into very important manufacturing and business kind of activities. The production of many goods is under strain due to price volatility in these key commodities. Some on this list, which we know are important for your businesses as well, and it's of course critical to monitor the price, availability, and the pressures on the markets for these commodities. And nowhere in the world can companies fully pass on full cost increases onto selling prices. The difference in producer prices and consumer prices here show you a very broad picture of margin pressures on companies. While not all cost pressures are passed on, inflation has started to pick up rapidly in the region. Egypt's near 13% average expected this year will hurt business margins. We expect inflation to near 6% in the UAE, and our Saudi Arabia annual average forecast would entail inflation reaching near 4% at some point this year to again average towards that a little bit above 2% average. We also have two key markets here that are under some exchange rate risk. We expect the Egyptian pound to average 18.3 to the dollar this year, and the central bank has opted to devalue its currency as the emerging market sell-off driven capital outflows from Egypt have resulted in immense pressures on the country's overvalued pound. This action was taken proactively to prevent volatility and a large sell-off amidst high inflation. The inflows of support from the GCC markets, such as Saudi and others, will help keep the reserve stable. But we want to highlight that the challenges surrounding access to FX will remain with us through the coming 12 months, and import restrictions remain as well. As for Lebanon, the ongoing political uncertainty keeps confidence in the market at record lows. The latest elections failed to change that. In fact, the parliamentary elections in Lebanon produced a higher representation of opposition and independents, with no one party gaining a large majority. Though such a development can be conducive of change away from the status quo, it does create deeper fragmentation in the parliament. As a result of that, we expect more cumbersome and delayed policy making. And, more concerningly, given the new face of government and the incumbent party's pursuit of approval from their voters, we foresee delays to adoption and therefore delays in accessing an IMF bailout. So the more there are delays to reforms, the further delays we might see an IMF bailout. And therefore, we should expect continued volatility in the lira on the black market rate, given the lack of confidence in governance in Lebanon. We'll also expect an official devaluation closer to 23,000 lira against the dollar. What we see from the hundreds of multinational companies we're working with is a strong focus on managing profitability in 2022. Executives are continuing to improve supply chain resilience. They are evaluating intermediaries' margin capture and their own financial resilience. They are reevaluating their product mix to fit emerging needs, new needs of customers, and new price points that are required. And even they are thinking about discontinuing some products if they are not profitable. For increasing value to the customer, which is necessary in most cases to justify price hikes, this is a very important priority. And executives are lastly, of course, keeping in mind longer term versus short-term strategy differentials, revising their prices to differentiate among competition in the second half of this year. So in conclusion, you will see an uptick in investment and construction activity in the GCC, with main focus countries being Saudi and UAE. Egypt will also continue to provide targeted opportunities, but capturing these will require being close to customers, showcasing cost efficiency, enhancing qualities of your products, providing excellent value-added services, post-sales support, and a competitive customer engagement strategy. While all firms will see margin pressures intensify, they are ensuing and ensuring that they continue to invest in talent and marketing to maintain a competitive business. Thank you very much for listening, and I hope to take any questions you might have.
Thanks, Zeynep, for that very interesting and insightful regional overview, especially in this very volatile situation that we find ourselves in today. Let's take a look now at the industrial coatings market and go into a few more details there. I'd like to start by looking at the impact that the evolution of the demographic has had on the coatings industry. And here we can think about rapid urbanisation, and this is very definitely a key element for the Middle East region, where we see increasing demand for housing and infrastructure. The global middle class is increasing, and this is driving demand for things like automotive, consumer goods. We then, of course, have scarcity of resources, which is all about the sustainability element of our industry. And this is driving a shift to green coatings, such as powder and, of course, waterborne as well. And then one last point here, just to point out, is the digital transformation, how the Internet of Things is changing how industry interacts and how we as a supply chain, as a value chain, interact with each other and interact with our customers. Staying with the theme of population growth and urbanisation, I'm just showing here how various key cities in the region have grown significantly even since 2019. So here we can see Kuwait City and Cairo, Riyadh, all growing at 6-7% over the last 2 or 3 years. Dubai, Muscat, 4.5-5%. And when we look at the region generally, the population is growing at 1.6% annually, which is above the global average, growing 3 times faster than Western Europe over the last 50 years. And major cities, as I'm showing here, are growing compared to some of the Western cities, which are in fact in decline. Looking at the growth prospects for the industrial coatings over the next 3 years or so, notwithstanding the conflict situation, which is still to really filter through, we can see that the Middle East is growing at around about 5% compared to global growth, which is around about 4%. And what we've done here is pick 4 key segments into which powder coatings specifically get sold into. So there's auto assembly, consumer spending, industrial output and fixed investment. And across all of those, you can see that the growth rates for the Middle East region are between 4.5 to about 6%. So the outlook is very positive indeed for the region. And in a moment or two, we'll take a look at what is really driving those growth factors. If we turn our attention now to the key segment drivers that we've seen in the region over the last 2 years, and this is looking very much through all neck size, there are 3 segments that really stand out for us. The first one there is construction, and there were numerous high profile projects across the region. There's the new Cairo city development in Egypt, of course the Qatar World Cup, construction that's going on in Saudi Arabia. And then these construction projects are driving, let's say, these sub-segments. So construction materials, boards and panels and flooring. And then that feeds also into wood segments. Again, we have flooring and furniture. And then when we think about technologies, specifically from the all-neck side, we see an increased requirement for isocyanate-free technologies going into the construction industry. If we look at automotive and specifically vehicle refinish, we see here there's a transition to sustainable technologies. They're going to fast cure at room temperature, a drive to water-based and a drive to high solids clears. And again, as the global isocyanate shortage kicks in, this is driving technology to lower OH value polymers. And then the final segment we call out over here is packaging, and probably this is global and not just to the Middle East, but there's been significant growth in packaging driven by the pandemic as people stay at home, an increase in flexible and rigid packaging, food and non-food packaging, and all driven by the increased online consumerism as people stayed at home during the various lockdowns in the region and around the world. But common to all of the segments, and not just the segments here, that there are numerous sustainability drivers that are driving technological change. Circular economy and safer materials are just 2 that I call out here. So that's a look at the high-level industrial coatings market in the region. What I'd like to do now is spend the rest of the webinar focusing on powder coatings and specific trends that are driving growth in the powder coating industry. On this slide here, we take a wider look at the various trends that are impacting and driving the powder coatings industry. And what we can see is there are a number of high-level trends, and I've outlined them here as enhanced performance, cost reduction, penetration versus liquid, functionality, and then regulation sustainability. If we look specifically at enhanced performance, we can see a number of segments here: architectural, ACE, rail, GM, which all have very similar let's say requirements to drive those segments. So there's corrosion resistance, moisture, scratch, for example, that are relevant to all those segments, and we continually see the need for improvements in those areas. When we think about cost reduction here, we're thinking about how can we make the coating more cost efficient. So thinner layers, single layers versus multiple layers, fit for purpose resins, process simplification, reducing pre-treatment, and this kind of thing. When we talk about penetration versus liquid, I think this is fairly obvious. It's very definitely where powder can grow when we look to displace liquid, and this really opens up new substrates like MDF, the solid woods, and plastics to name a few there. Functionality here, this is where we get into the special effects of the coating that can be driven by the resin. We've called out here self-cleaning, low dirt pickup, and high surface energy as examples of how the functionality of a coating can really drive growth and drive a trend. And then lastly, there's regulation and sustainability, and here I think these are very clear. So there's low bake, fast bake, and that ties in with the new substrates like MDF and solid wood. Then there's bio-based materials, recycled materials, and then reducing the substances of high concern, whether it be trimethylene hydride, it could be tin, and it could be BPA. So these are just some high-level overviews, if you will, of what we see as driving the trends in powder coatings, things that are looked for to be improved in the coating, which requires improvements in the resins as well. What I'd like to do now is focus more closely on the construction segment. The storyline here is that expanding population I mentioned earlier is driving construction of both residential and commercial buildings. In turn, this is a growth engine for the heavy machinery, the construction machinery, if you will, that is needed to construct the buildings and the infrastructure. It's a driver for architectural aluminium, so that the extrusions that are used for doors and windows and curtain walls, as well as the panels for cladding. And then we get to the heating and ventilation. Buildings need temperature control. They need to be heated and cooled. And the last one that I mention here is domestic appliance. Whether the building is residential or commercial, kitchen white goods will be needed by the people that will occupy these buildings. So all of these segments are important end uses for powder coatings. So if construction is growing, that will have a direct and positive impact on the growth of powder coatings as well. What I've got here is some data relating to the architectural aluminium market. In 2020, the powder coatings market for architectural aluminium was estimated at about 600,000 metric tons. No surprise that China dominates at about 2/3 of that market, followed by Europe at about 1/5. But then we see the Middle East and Africa at about 8%, and this is bigger than both for the Americas and for the Southeast Asia region. And the market for aluminium powder coatings in the Middle East is expected to increase by 3 to 3.5% by 2025. And this is the fastest growth for any region and on the same level as forecast for China. And the drivers for this, well, as I just mentioned, construction and infrastructure investments are the key. Not directly related to aluminium growth, but some interesting things to note nonetheless. We are seeing gradual changes in construction materials. For example, the growing use of timber and lightweighting composites, and this will be important in the future for low temperature cure powder coatings. We're also seeing a change in the construction techniques, and there's a growing trend for off-site prefabrication as opposed to everything being done on site, and we can imagine that in future this will open up opportunities for construction elements to be powder coated, which today are possibly not being powder coated. As we've identified construction as being the key macro trend as a leading indicator for the powder coatings market, let's take a look at some of the key construction projects going on in the region. Firstly, we have the new capital city development in Egypt. This comprises something like 1,700 separate projects valued at $845 billion. And the proposed new capital of Egypt is a large-scale project under construction, first announced in 2015 at the Egypt Economic Development Conference in March of that year. The city is to be located something like 45 kilometres east of Cairo and halfway to the seaport city of Suez. According to the plans, the city will become the new administrative and financial capital of Egypt, housing the main government departments and ministries as well as foreign embassies. The city will occupy 700 square kilometres in total area and support a population of 6.5 million people, though it's estimated that the figure could rise to 7 million. And the myriad of construction and infrastructure projects underway clearly offers considerable scope for the powder coatings industry in Egypt. Of course, this year is World Cup year, with Qatar staging the tournament. Ever since Qatar was awarded the event by FIFA in December 2010, the country has been developing an infrastructure that will able to accommodate an anticipated 1.5 million visitors. This includes 7 brand new stadia plus 1 fully renovated. The renovated stadium is shown here, the 45,000-seater Khalifa International Stadium on the outskirts of Doha. But this is not just about stadia, it's also about hotels, roads and transport infrastructure, with the total cost of the various construction projects estimated at 200 billion. A major development is Lusail City, a cost of 45 billion, and this will be the home of the 80,000-seater Lusail Stadium, which will host the final and can be considered one of the biggest construction projects in the world, along with the Egypt capital city. When built, this new city will reportedly contain 19 districts, 22 hotels, golf courses, theme parks, and the like, with enough housing for 200,000 residents and room for 170,000 workers and 50,000 visitors. So again, we can anticipate the opportunities here for powder coatings. The last project I want to mention, but of course there are still many more, is the expansion of the Al Maktoum International Airport at the Dubai World Centre. Opened in 2010, originally handling cargo only, a passenger terminal was added in October 2030 to handle up to 7 million passengers per annum. The current $33 billion expansion will make the airport the world's largest by 2050, capable of handling 220 million passengers. And this will ease pressure on the Dubai International Airport, which currently handles 100 million passengers and has limited room to expand. So we can see with this project, as with the previous 2 mega projects, construction growth engines are providing a lot of structures that need painting and will offer significant opportunities for powder coating growth over the coming years. So that brings us to the end of the presentations. I do hope you've enjoyed this short webinar and found the content useful. Of course, we're always interested to hear what you see, and I encourage you to share your observations with your Allnex representative teams whenever you have the chance to speak, or hopefully meet in the near future. So now we have time for a Q&A session, and I'll hand the floor back to Jennifer.